Hi there, welcome back to Finance Talks My Robot family. In today's video, we are going to talk about the stock market for beginners. So before starting this video, please like this video and subscribe to this channel for our future updates. Investing is a way to put money away when you're occupied with other things and make it work for you so that you can enjoy the full benefits of your labor in the future. Investing is a way of achieving a happier outcome. Warren Buffett, the legendary investor, describes investing as the method of laying out capital now in order to earn more money later. The aim of investing is to put your money into one or more forms of investment funds in the hopes of increasing its value over time. Let's presume you've set aside $1,000 and are eager to dive into the world of investing. Perhaps you just have $10 extra a week and want to start saving. In this post, we'll walk you through the steps of becoming an investor and show you how to increase your profits while lowering your expenses. What kind of investor are you? Before you invest your money, you must first decide what type of investor you are. An online broker like Charles Schwab or Fidelity will ask you about your investment goals and how much risk you're prepared to take on when you open a brokerage account. Some investors tend to manage their money's growth actively, while others prefer to set it and forget it. Stocks, shares, exchange-traded funds, ETFs, index funds, and mutual funds are all available via more traditional online brokers, such as the two listed above. Online brokers. Brokers may be full-service or low-cost. As the name suggests, full-service brokers have the full spectrum of conventional brokerage services, including financial advice for retirement, healthcare, and all things monetary. They normally only work with high net worth clients and will charge significant fees, such as a percentage of the purchases, a percentage of the assets they control, and even an annual membership fee. At full-service brokerages, minimum account sizes of $25,000 and up are typical. Traditional brokers, on the other hand, justify their high fees by providing personalized recommendations tailored to your specific needs. Discount brokers were once the exception, but they are now the rule. Many discount online brokers also provide resources for choosing and putting your own purchases, as well as a set-it-and-forget-it Robo Advisory service. Online brokers have introduced more features, such as educational materials on their websites and mobile applications, as the financial services industry has advanced in the 21st century. Furthermore, while some discount brokers have no, or very low, minimum deposit requirements, you may be subject to other limits, and accounts without a minimum deposit may be subject to fees. If you're thinking about investing in stocks, this is something you should think about. Robo Advisors. Following the financial crisis of 2008, a new type of investment advisor emerged, the Robo Advisor. Betterment's John Stein and Eli Broverman are also credited as the pioneers in the region. Their aim was to use technology to reduce investment costs and streamline investment advice for investors. Other robo-first companies have sprung up since Betterment's launch, and even existing online brokers like Charles Schwab have added robo-like advisory services. By 2025, 58% of Americans say they would use robo-advice, according to a study by Charles Schwab. 3A robo-advisor might be right for you if you want an algorithm to make investment decisions for you, including tax loss harvesting and rebalancing. And, as the success of index investing has shown, if your goal is to create long-term wealth, a robo-advisor might be a better choice. Investing through your employer. If you're on a tight budget, put 1% of your income into your company's retirement account. The fact is, you're unlikely to notice a contribution of that size. Contributions to work-based retirement accounts are deducted from the payroll before taxes are assessed, making the donation much less costly. Once you've gotten used to a 1% contribution, you might be able to increase it when you get annual increases. The extra donations are unlikely to be missed. If you have a 401k plan at work, you might already be investing in your future with mutual fund allocations and even shares in your own business. Minimums to open an account. A minimum deposit is required by many financial institutions. In other words, unless you deposit a certain sum of money, they will not approve your account application. Some companies won't even let you open an account with a deposit of $1,000. It's a good idea to shop around and read our broker feedback before deciding where to open an account. Minimum deposits are listed at the top of each review. Some businesses do not have a minimum deposit requirement. Others will frequently reduce expenses, such as trading and account management fees, if the balance exceeds a certain threshold. Others can offer a set number of commission-free trades in exchange for opening an account. Commissions and fees. There is no such thing as a free lunch, as economists tend to say. Despite the fact that many brokers have recently raced to minimize or eliminate trading commissions, and ETFs provide index investing to everyone who can trade with a bare-bones brokerage account, both brokers must earn money off their customers in some way. In most cases, your broker will charge you a fee any time you buy or sell stock. Trading commissions start at $2 per transaction and can go up to $10 for certain discount brokers. Some brokers do not charge any trade fees, but they compensate in other respects. Brokerage services are not provided by any charitable organizations. These fees will add up quickly and have an effect on your profitability depending on how often you trade. Stock investment can be expensive if you jump in and out of positions regularly, particularly if you only have a small amount of money to invest. A trade is an order to buy or sell shares of a single company. If you try to buy 5 different stocks at once, this is considered 5 separate trades, and you will be paid separately for each one. Let's say you plan to invest $1,000 in the stocks of those 5 firms. To do so, you'll have to pay $50 in trading fees, assuming the charge is $10, which is 5% of your $1,000. After trading fees, the account will be reduced to $950 if you spent the whole $1,000. This equates to a 5% loss before your savings have even started to gain. If you sell these 5 stocks, you'll have to pay the trade costs again, which will be another $50. It will cost you $100 to make the round trip, buying and selling, on these 5 stocks, or 10% of your $1,000 initial deposit. You have lost money by simply entering and leaving positions if your assets do not gain enough to offset this. If you intend to trade regularly, take a look at our list of low-cost brokers. Mutual fund loads, fees. Aside from the trading fee for purchasing a mutual fund, this form of investment has other costs. Mutual funds are professionally operated pools of investor funds that invest in a specific area of the market, such as large-cap U.S. stocks. When investing in mutual funds, an investor may be charged a variety of fees. The management expense ratio, MER, which is paid by the management team per year depending on the amount of assets in the fund, is one of the most relevant fees to remember. The annual management expense ratio, MER, varies depending on the type of fund and ranges from 0.05% to 0.7%. However, the higher the MER, the greater the effect on the fund's overall results. When purchasing mutual funds, you can encounter a number of sales charges known as loads. Some are front-end loads, but no-load and back-end load funds are also available. Before you buy a fund, make sure you understand if it has a sales load. If you want to stop these fees, look for no-load and no-transaction fee funds on your broker's list. In comparison to equity commissions, mutual fund fees are potentially an advantage for beginning investors. This is because the payments are the same regardless of how much money you spend. As a result, you can spend as little as $50 or $100 per month in a mutual fund if you meet the minimum account opening requirements. Dollar cost averaging, DCA, is a concept for this technique, and it can be a perfect way to get started investing. Diversify and reduce risks. In the world of investment, diversification is thought to be the only free lunch. In a nutshell, diversifying your investments reduces the likelihood of a single investment's poor performance negatively impacting your total investment return. It's a financial jargon way of saying, don't put all your eggs in one basket. When it comes to diversification, it would be most difficult to achieve by equity purchases. The costs of investing in a large number of stocks, as previously mentioned, can be harmful to the portfolio. It's almost impossible to have a well-diversified portfolio with a $1,000 deposit, so expect to invest in 1 or 2 companies, at most, to begin with. This will place you at greater risk. This is where mutual funds or exchange-traded funds, ETFs, have the most value. Both types of shares are more diversified than a single stock since they include a large number of stocks and other investments. The bottom line: even if you are just starting out and have a small amount of money, you can invest. It's more complex than just choosing the right investment, a daunting job in and of itself, and you must be mindful of the limitations you face as a new investor. You'll have to do your homework to find the minimum deposit requirements and then compare the commissions to other brokers. Chances are you won't be able to cost-effectively buy individual stocks and still be diversified with a small amount of money. You will also need to make a choice on which broker you would like to open an account with. What do you think about our video? Are you planning to invest in dividend stocks? Let us know in the comments below. I just wanted to say, thank you so much for watching. If you're still watching, you're an absolute legend, and remember to smash the like button and the subscribe icon so you get the latest updates when we post the new videos. See you soon.